Welcome back to RealPage Economy Express. Let's get right into the freshest economic data. Starting with the unemployment insurance claims, we observed a slight improvement. The week ending May 18 showed a reduction in initial claims to 215,000, decreasing by 8,000 from the prior week's revised level. This subtle decrease suggests a relatively stable job market, with the insured unemployment rate holding steady at 1.2%. Turning to labor market, there has been a noticeable deceleration in job openings across most states, with only one state showing an increase last month. Similarly, hires and separations also saw minimal changes nationally, indicating that employment activities are stabilizing. In the housing sector, the scenario appears more challenging. Pending home sales in April plummeted by 7.7% month over month, reflecting the impact of rising interest rates on buyer sentiment and activity. All regions of the U.S. experienced declines, which paints a cautious picture for the housing market. Meanwhile, existing home sales also receded by 1.9% from March to April, with an annual decline of 1.9% compared to the same period last year. Despite these declines, the median existing home price saw a substantial year-over-year increase of 5.7%, indicating that home values remain resilient even in a slowing market. Shifting our focus to new residential sales, the figures continued to contract, registering a 4.7% decrease from March and a 7.7% drop from April of last year. The median home sales price for new houses, however, climbed to $433,500, underscoring a persistent upward trend in home prices despite slower sales. The S&P CoreLogic Case-Shiller Index, a critical barometer for home prices, echoed this sentiment with a 6.5% annual gain in March, signaling that significant markets are still experiencing robust price appreciation. This is particularly evident in high-demand areas like San Diego, New York, and Cleveland. Lastly, business activity in May saw a notable quickening, with the U.S. Composite PMI Outlook Index soaring to 54.4, the highest since April 2022. This acceleration is supported by a rise in services sector activity, though it's tempered by persistent uncertainties around inflation and the upcoming presidential election. In summary, the current economic landscape presents a mixed bag of steady employment and business activity against a backdrop of a softening housing market and rising home prices. As we navigate these contrasting dynamics, the key will be to monitor how these trends evolve in the coming months, especially with potential shifts in interest rates and inflationary pressures. We'll continue to monitor these trends closely, so stay tuned for our next episode in 2 weeks. Thank you for watching.